This is an Uncovered Japan Company research report on NPC Incorporated, ticker 6255. NPC is a small Japanese machinery maker with 3 connected positions: a 30-year relationship supplying First Solar, patented equipment that separates reusable glass from old solar panels, and an early foothold in perovskite manufacturing tools. The attraction is genuine technology and a fortress balance sheet. The central risk is that one customer still drives an estimated 55% of sales. At the report date, NPC traded at 29.15 times guided earnings, but only 12.04 times trailing earnings. That split reflects a deliberately depressed fiscal 2026 profit trough. Price to book was 1.53 times. More important for a project-driven supplier, the equity ratio was 83.9%. Cash was 6.42 billion yen, and interest-bearing debt was 0. Cash alone represented roughly 39% of the company's market value. NPC builds large made-to-order solar cell production lines and related factory automation equipment. It also inspects solar plants, handles reuse and intermediate processing, and sells recycling machines. Its hot knife system removes a panel's cover glass without shattering it, while a patented scraper removes the remaining resin. Clean glass can then return to flat glass production. This full lifecycle coverage gives NPC relationships and operating knowledge that a single product equipment vendor does not have. The report offers estimated mix, shows solar cell production equipment at about 55% of sales, recycling equipment at roughly 18%, factory automation and vacuum tools at 12%, components at 10%, and environmental services near 5%. Production tools anchor the First Solar relationship and the earnings cycle. Recycling is the structural growth business. Components are smaller but carry the highest margins. Diversification is happening, but it has not yet displaced the dominant customer relationship. NPC's revenue fell to 4.4 billion yen in fiscal 2022, more than doubled the next year, and peaked at 10.8 billion yen in fiscal 2024. Operating margin reached 22.6% at that peak. Fiscal 2026 guidance calls for about 8 billion yen of revenue and much lower profit. This volatility is typical of a supplier recognizing a few large projects, so one year's earnings should never be treated as the company's permanent earning power. Cash flow follows the project cycle. Record fiscal 2024 profit produced only 558 million yen of operating cash flow, because work in progress and receivables absorbed cash. Fiscal 2025 then released that working capital and generated nearly 1.5 billion yen. Across 7 years, cumulative free cash flow was 5.44 billion yen, about 780 million yen per year. With low capital spending, the model is capital light, despite its large machinery. NPC's first moat is 30 years of process knowledge and trust with First Solar. The second is intellectual property around clean glass separation, roughly 5 hot knife patents plus a separate EVA scraper patent. The third is an end-to-end solar network, covering equipment, inspection, reuse, and recycling. Its Matsuyama factory can assemble oversized custom lines, and its Michigan base supports U.S. customers. But the first moat has a dangerous mirror image. Losing or sharply reducing First Solar business would hit the company disproportionately. The recycling case improved when AGC and Central Glass validated horizontal recycling using glass separated by NPC's machines. AGC also agreed to buy suitable recovered glass at a positive price. That changes discarded glass from a disposal cost into a saleable input, but only when the material is separated cleanly. Meanwhile, Japan faces a large wave of end-of-life solar panels and is tightening recycling policy. The combination strengthens demand for NPC's patented process, though the largest volumes build later in the decade and beyond. Gross margin exceeded 33% in fiscal 2024 and 2025, but management guides to 24.4% in fiscal 2026. The stated cause is low-margin domestic perovskite development work accepted to seed future production line orders. That is a credible equipment industry strategy, but it is not yet proof of future returns. The most important operating test is whether gross margin recovers toward 30% as follow-on orders and a better product mix arrive. NPC's trailing price-earnings ratio was about 12 times, near the low end of its 5-year history, and roughly half the 22.1 times average. The forward ratio was 29.15 times, because guided earnings per share fall to 24.6 yen from more than 61 yen. Historically, NPC's multiple expands when earnings trough and contracts at the peak. The valuation therefore depends on whether fiscal 2026 is temporary, not on choosing whichever headline multiple looks cheaper. The report authors fiscal 2028 scenarios span 600 yen in the bear case, 1,100 yen in the base case, and 1,700 yen in the bull case. These are analytical scenarios, not targets or recommendations. The bear assumes the earnings trough persists. The base requires recycling growth, gradual first solar recovery, and normalized earnings. The bull needs an earlier perovskite ramp and multiple large equipment orders. A simple cash flow cross-check clustered closer to 900 to 1,100 yen, arguing for caution. NPC is a debt-free niche machinery maker with genuine technology, strong cumulative cash generation, and exposure to two structural markets, solar panel recycling and perovskite manufacturing. The research score is 12 out of 20. The discount reflects concentration, order volatility, and a long wait for next-generation demand. 4 indicators matter most: First Solar's capex and NPC's backlog, gross margin recovering toward 30%, recycling orders following regulation, and perovskite development work converting into profitable production lines. Those signals will show whether the current trough is an investment bridge or the new normal. For a much deeper look, visit the free deep dives at uncoverjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security. Always do your own research.